Okay, now there are two things. This is a transaction, and I have only given you an example that this transaction involves what? Selling of a shoe. What can be the nature of transactions? The nature of transactions, you can transfer tangible assets, tangible property, shoe. You can transfer, companies transfer intangible assets, intellectual property, patents, trademarks, licenses, agreements. Fine. Other transaction, this transaction can involve financial transactions, intra-group loans. AE2 can give certain amount of loan to AE1 or can receive certain amount of loan from AE1. Fine. Intra-group loans, financial guarantees, hedging functions, intra-group treasury functions. Transaction can even involve hard to value intangibles. These transactions can involve intra-group services. For example, AE1 provides certain administrative support, certain IT support to AE2. So number of transactions. Insurance, intra-group insurance facilities, captive insurance, business restructuring transactions, pre-restructuring, post-restructuring. So there's a whole gamut of transactions which is dealt by the area of transfer pricing. Right? Now let me make a magic. Let me put down certain numbers. Okay. So effective tax rate in country B, say for example 30%. I'll quickly do the math. 30%. So country B will tax this because this AE2 receives a profit. Profit is what? SP minus CP, that is selling price minus cost price. So selling price was 100, cost was 60. So therefore 40 is the profit. So 30% of 40 would be what? So tax in country B would be what? 40% 30 would be $12. Right? $12 of profit in this transaction. Fine. $12 in this transaction as well. You can further assume that this independent party further sells this same shoe at say $110. So in this the profit would be $10. Fine. $10 of profit. $10 of profit. And further, similarly, this AE1 would be selling the same amount of same shoe in country A again at what? $110. Same. Let us assume $110. So again $10 of profit, $10 profit. But because these two are different countries, the effective tax rate in country A is not 30%. Let us assume it is only 10%. 10%, much less than the tax rate in country B. So 10% of $10, right? Only $1 profit. So this is it. Now, due to some clever scheming, AE1 is the parent. AE1 says to, and AE1 is the parent, AE1 controls AE2. So because AE1 is the parent, it controls AE2. AE1 says to AE2 that there is the amount of tax that you are paying, or rather our group is paying upon the profit in country B is huge. We are paying $12 of tax upon this transaction. So we'll come out with, we'll do some clever math. We'll do some quick scheming, and we'll save certain amount of tax. AE2 doesn't have any choice because it is controlled by AE1. It is it is compelled to do the bidding of AE1. So therefore AE2 says, okay, as you wish. Okay. So what happens? Okay, so you have AE1, you have AE2, you have independent entity, you have $60 cost. Quickly, this is a transaction, this transaction is same at $100, nothing changes. 40 is the profit, remains the same. Fine. Further selling is at 110, nothing changes. Further selling is at 110, nothing changes. Everything remains same, but for the pricing of this transaction, pricing of this intra-group transaction between A1 and A2 because of the compulsion, which is because of the control that A1 has over A2. A1 says that you sell this shoe to me not at 100 but at just, say for example, 70. So now this is $70. $70, 100, 70. So therefore the profit in this transaction, the item is same, nothing changes. The profit in this transaction reduces from what? 40 to what? 10. Tax rate 30%. 30% of 10 is what? $3. $3 of tax. Fine. So what happens? Tax was $12. Tax is $3. So by this arrangement, M&E group is able to save how much? $9 upon this transaction. $9 of tax upon this transaction. Now obviously you would have in your mind, what about this transaction? Because now the cost of the shoe to this A1 is only 70. Okay, let's take care of this as well. 70 and the selling price, further selling price is 100. Okay, so therefore now the profit is what? Now here the profit is 40. Earlier the profit was only 10. Effective tax rate 10%. So earlier the tax was only what? 10% of 10 is 1. And now the profit is 40. 10% of $40 is what? 4. So you see, in the earlier case, the total tax that was being paid by this M&E group among this combined transaction was how much? Was 12 plus 1. And now the total tax which is being paid by this M&E group on these two transactions is what? Is 3 plus 4. Right? Total tax is what? 7. Here it was 13. So $6 of tax has been saved by this M&E group using this arrangement. What happens? Ultimately what happens? See, the profit is $10 here and this profit has increased to $40 here. The profit earlier, it was $40 here in country B. Now the profit has been reduced to $10. So effectively what happens? $40 minus $10. This $30 of profit, where did it go? It is shifted from country B into country A, because here now the profit is 10 plus 30. Voila, the magic has happened. So this 30 which got reduced, minus 30, it got reduced. This has been transferred to country A. Why this has been transferred? This has been transferred in order to take advantage of the low tax prevailing in country A. This is an example of profit shifting. Profit has been shifted from country B into country A. And this shifting of profit leads to the tax base erosion in country B. So this is base erosion and profit shifting. Base erosion and profit shifting. Remember this word, BEPS, BEPS. How did this BEPS, base erosion and profit shifting occurred? This occurred because of this clever pricing, clever transfer pricing. Now, please be very clear. I'm not saying that transfer pricing is always used to shift profit and erode the base. No, this is certainly not the case. This is a very, very normal situation. This should be the case, but then yes, transfer pricing can be used to shift the base, can be used to erode the base and shift the profit, can lead to base erosion and profit shifting. So this is transfer pricing. In a nutshell, 5, 10, 15 minutes, this is what is transfer pricing. So many transactions, so many, I mean, completely fascinating area. And you would have noticed so many nuances and so many. You have accounting, you have transactions, so ultimately you have business. How do you structure? You have business people. And this transfer pricing, this sort of situations, structuring, this makes this area very, very, very multidisciplinary. When you talk about intellectual property transactions, so you're talking about law people, contracts, And ultimately, how do you transact? This is an arena of business personnel. So you have business people, you have law people, you have contract experts in contract, you have IP people, intellectual property, and now you also have technology people. Fine. So this is the area. This is the area these are the two broad branches of international tax. First one is tax treaties, and the second one is transfer pricing.